What's going on YouTube? The Dividend Stock King here with another video. And today we're talking about my portfolio the update. Today is November 10th, 2020. And I'm talking about my portfolio. I'm up to $10,000 pretty much invested in my money and the stock's worth. Today I'm up $244. Today was actually a decent day for the stock market for the stocks that I own. It was a really good day versus the other days we've been having in the stock market. But you know, I'm up $244 today. Today was a good trend. As we see today, it was a really good trend. It was up and up and up and went down and up. So today was a good trend. Good trends are good and bad because I look at it because if the market's going down, that means stocks are cheaper. If the market's going up, the stocks cost a little bit more money. So it's a give and take. Of course, you want the market to go up, but you're going to pay more for a stock. Like Main Street Capital, I was buying this for like $28, $27 a share. Now today is $31. So it might go up to $32, $33. So it'll go up. I mean, I like it because it goes up, but if I want to buy more shares, I'm gonna spend a little bit more money. So that's the pro and con of the stock market. You want the stocks to go up in value, and you want your money to go up in the value. You want the value to go up, and then you want the dividends to go up as well. But you might get burned at the end because you gotta pay more for a stock. But that's fine though. My strategy is very simple. My goal is to make 500 a month in passive income of dividends investing. I feel that way because I need another stream of income. Okay. And instead of me buying dumb stuff and buying stuff I don't need or want, I could take that money and buy a stock with it. I'll give you one quick story. A long time ago, probably like late last year, I bought some food from a restaurant and it was late night. And I knew that around time of night, their food will not be on par. It won't be good because late night, they just want to cook something, get out the way. And I spent about $19, $20 on that meal. Got home and I ordered some chicken wings. And I ordered like 20 wings and it was so nasty. And I couldn't return it because they were closed. I ain't feel like going up there, but I ate like 8 or 9 wings out of it. I ended up, making me a sandwich because I was still hungry. And I should have made, man, I should have stayed. I should have went home, took that $20, bought me an asset, bought me a stock that pays every month, and made that same sandwich. And that's when it dawned on me that some things I could eliminate to some things I had to get, but I could use that money towards something else, like a stock. And that's why I started buying more stocks, mainly this year during the whole thing with the virus and everything. Market's going down. I've been just loading up on stocks because they're half price. If you want to get invested in the stock market when the whole virus hit, was the perfect time to get in because the stock market before then was really expensive. It was really high. And when the virus hit and everything crashed, that was the perfect time to invest because if a stock costs $60, now it's $20, you're buying, 3 shares at the price of one. Over time, these stocks will climb back into where they were. So your equity be tremendous. So most of these pay monthly. And my goal here, I'm gonna show you my goal. I try and get each stock to $10 a stock. So 10 stocks at $10, $100 a month. And I figured 10 stocks, $10 a per stock, that's $100. I could either go find another 10 stocks to get to $100. That'd be $200 a month. And my portfolio is also diversified versus I'm not putting money in one stock. I'm buying different stocks. And I like this strategy because if one takes a hit, or let's say Main Street Capital takes a hit, I'm not going to be affected because instead of getting $200, I'm getting $290. So I'm not going to be as affected. And I can always sell those shares off and reinvest that money into another company. So I like to diversify versus put all your money in one basket. I'm diversifying my basket. So once I get to $10, I pretty much stop buying it unless it's a really good killer deal. CLM is controversial because it's a super high dividend yield. It pays a super high dividend per month, and people are buying it. It's inexpensive, and it pays a really good dividend. 58 shares pretty much get you $10 a month, and it's 11, $12 a share. A lot of controversy with it, but do your own research before you buy any stock, any ETF. Do your own research. These are the stocks I'm invested in. So right now, I got this one though. So these stocks I got to $10 right now. So 1, 2, 3, 4, 5, 6, 6 right now. These 6 I got to $10 so far. Okay. QYLDs is $10 right there. 50 shares is $10. And now I'm getting OCR $10, RIV $10, ANG $10, and I'm going to Prospect Capital $10. And that should be $100 a month. 1, 2, 3, 4, 5, 6, 7, 8, 8, 9, 10. So all they get ANG or Prospect Capital is $10. That'd be $100 a month, and it won't be $100 on the head. It might be you talk about $10.58, and that adds up over time. So you're talking about $100.05. Now I might have to find 10 more shares to get to $10 a month. Excuse me, I'm not even sure what to do at that point. It depends on how the market looks, what I want to invest in, and where I want to go as a goal. Oh, it's really expensive. It's like $64 a share. I think I take that money and buy some different shares, but I digress. I gotta take this money into other different shares, but I'm building passive income. The name of the game is this. My channel is very simple. We need to build passive income because you can't rely on a job. You can't rely on different things. So invest your money into dividend paying stocks. I'm not saying that's the way to go. And I'm also saying that you do your own research, or do your own homework and research before you buy any stock or share. But I would tell you, but I would say we had to invest our money somewhere. I don't believe, in my personal opinion, that we should put our money on the savings account, getting 0.5% of our money. You take $100 and you put in, you take $200 and you put in Main Street Capital. You buy 10 shares of CLM, you're gonna spend about $130, but you're gonna make maybe $1 or $2 or so in dividends every month. So and the value might go up. It'll go down, but it may go up. So it's like, should we put all our money into a savings account? You should have an emergency fund. I do agree with that. That's a great idea because you got to prepare for life, okay, in case something happens. But we shouldn't put all our money into a savings account, then buying stuff we don't need. I would have known when I was younger, but I didn't know. I wasn't taught this. But that's the end of the video. Get updated to my portfolio. Enjoy the video, like the video, share the video, and if you need help buying stocks or you need some direction to buy stocks, leave it up in the description box below. But mine is simple. I'm trying to make passive income. I'm trying to make $500 a month. That will pay our water bill, or light bill. It will pay our internet bill and probably our phone bill. So it'll pay 3 to 4 bills every month. So it's having that off our backs with dividends is great. And I could stop buying dividends. I can do 2 things. Once the $500, I don't have to buy no more dividends. I can just use the money I was spending for stocks where I want to and use that dividend income to pay those bills. Or I can reinvest those dividends to make more money, which I'm going to do. I'm going to reinvest that money, that $400 a month, into buying more stocks. I'm trying to get $1,000 a month, or $2,000 a month, or $3,000 a month, but paying for my retirement or whatever. Okay, so thanks for watching my video. Please subscribe to my channel, like the video, share the video, and I'll see you next time.